Obviously, that was a big sell-off today, and in this video I'm talking about what happened in the markets in general, but also specifically about NIO. And first of all, today will be only screen recording because unfortunately my microphone went kaput and my computer is also a little bit slow today. So anyways, let's dive into it. First off, what you see here is the Nasdaq, and basically this year we've been all going up, but of course also in a zigzag. So we have those downturns from time to time and also some larger ones. So we had also this major correction, which was around 5% down. And this time it looks to be similar also on the tech stocks, minus 5%. And we're now sitting at a similar level compared to last time where we actually found support. So the question is whether or not we will actually bounce from here and whether or not this was the end of the correction. Now, what may have caused the correction this time is fear about rising interest rates. So these are 10 years government bonds. And what you can see is that the interest rates on the 10-year bonds are rising and are actually back down to a similar level before COVID hit. And while growth stocks are affected by rising interest rates, however, we need to say that also on a macro level, interest rates should be staying quite low for quite some time now. So it's not sure that this will be kind of the end of the bull market because of the interest rates rising here, but it's definitely something to look at also in the context of Nasdaq and then also in context of inflation. And it could have certainly triggered this downturn and this correction here. And in case that we are breaking through the barrier here and also go below, let's say the 13,100 points here of Nasdaq, then this could certainly be worrisome and maybe a new trend actually out of the bull market. So now let's have a look at NIO, and the recent uptrend was unfortunately not sustainable enough, more than 10% up, but now it quickly ran out of steam and we are now down 20% from the recent highs. And I was kind of caught in a bull trap here because I thought that the 54 US dollars would actually be solid support. Actually, in fact, it has been support for a couple of days here. And I thought because we have the earnings coming up in the 1st of March, that we would actually see a recovery from here and a run into earnings reaching maybe 60 US dollars or more. But now with this market correction as strong as it was today, obviously we broke through the support here and ultimately found new support about the 50 US dollars. And it's interesting because if you're watching the posts made here in this network where I invite the NIO tier gang members and so on, we saw actually that there are some bullish news around NIO. For instance, the 100 kilowatt hour battery has so much demand that they are actually pushing back the delivery times for it. And also this notice here is about the Chinese New Year. And it seems like this year the demand has been stronger for electric vehicles in general because people are usually staying at their places. They're not traveling as much as usual with Chinese New Year. So we could actually expect better than usual February numbers, and the February numbers are usually pretty much impacted by Chinese New Year. So now you see NIO hasn't really reacted to such kind of bullish news in the recent days. And is this now something to worry about, or how to deal with such kind of information? So first of all, I think that NIO is kind of right now at the mercy of the overall markets. So I really hope that tech stocks overall will actually find a bottom here and that we can actually continue with the bull run. And in that scenario, I expect also NIO to bounce from these levels and actually stronger than most other stocks, usually maybe fueled by the run into the earnings and also by those bullish news because there's lots of pent-up bullish news for NIO. But at the same time, we also need to see that maybe investors are curious now after the really big run-up in NIO through the last year, that they first want to see the new numbers and so on and are more cautious. But I think actually right now it's actually overall driven by the market sentiment much more than actually the fundamentals of the company, because the fundamentals actually haven't changed, or rather changed towards the positive in my point of view. You've seen that in the past I said that Q1 will actually be challenging for all of the automotive stocks including Tesla, just because of the fact that it's a cyclical industry. And now, obviously, with some negative news and reports and fear, uncertainty, and doubt, it's easy to shake out some of the weak hands, which will possibly not benefit from a recovery if we should see that into the earnings next. So all in all, I think this is kind of a normal correction here due to the overall market impacts. I'm not worried about NIO in terms of the fundamentals, but certainly if the markets go lower from here. So in the end, the company hasn't changed, quite in the contrary, lots of improvement on NIO's side actually, but the overall markets are dragging the stock down, and we need to see like what was happening with the overall market conditions, and based on that, NIO possibly still may continue its run into the earnings. I don't know yet. I obviously made the mistake on going too bullish in here, but that doesn't matter as a long-term investor, because in a couple of years there is nothing to worry about this small dip here and this correction in my point of view. But as always, this is not stock trading advice, this is just my personal opinion. So looking forward to what are your thoughts down in the comments below, and see you in the next one, hopefully with better video and microphone. Thank you guys for watching. See ya.